Welcome to the Next Gen Mentoring Forum. The Next Gen Mentoring Forum series is designed to empower, educate, and illuminate individuals who are interested in the financial planning industry. At each forum, an expert will discuss a topic in the field of financial planning with the purpose of inspiring critical thought and discussion. In today's session, Dr. Chien takes a hard look at actual retirement statistics from multiple government surveys.
No, we can just say that I'm going to be hosting today's session, plus I will be interviewing attorney Karakachian.
So excuse me, typo error here. Today we'll be interviewing Dr. Hratch Karakachian and talking about the retirement stimulus packages offered by the federal government at the time. My name is Josiah Gonzalez, graduate program specialist in the School of Management. I'm your host today. I'm a proud CLU alum of the MPPA program. Dr. Chia-Li is an assistant professor and director of the financial planning program at California University. She maintains an active planning practice specialized in succession program management at the Value Growth Institute. She's authored 3 books. Most recent peer-reviewed research book is by Palgrave Macmillan, Springer Nature, titled Enhancing Retirement Success Rates in the United States, Leveraging Reverse Mortgages, Delaying Social Security, and Exploring Continuous Work. Next Gen Mentoring Forum is sponsored by California Lutheran University School of Management Financial Planning Program. We offer MBA and financial planning that help financial advisors pursue a leadership position or grow their financial planning practice by deploying advanced financial planning, effective client communication / counseling, streamlined practice management, as well as leverage fintech.
All right, with that, thank you, Josiah, for the introduction. And I am very honored today to have the session today with the attorney Karakachian. He is a senior adjunct faculty member at the California Lutheran University School of Management. He had been teaching for the MBA in financial planning program since 2013. Besides his long career in the Big 4 accounting firms, his current practice helps businesses in the tax, real estate, as well as all sorts of business type of counseling. So welcome, Attorney Karakachian. And we have a lot of materials to cover, so bear with us if our speed is going a little bit faster than normal because we have jam-packed material today. We are going to go through the individual and businesses filing deadlines first. I will be asking Hratch whole bunch of questions. Hopefully through those questions, we'll be able to answer some of the questions that you have. Then we're gonna switch gear to talk about the stimulus for the families. Every single family in the States qualify for some sort of stimulus, so we're gonna go through that. Then we're gonna spend a bulk of our time looking at the stimulus for the business, especially for those of us who own businesses out there. What are some of those benefits that we could take advantage of today? And then after that, I'm gonna go through some kind of a practical next step of looking at, so if you are interested to do some of the things, especially in the stimulus for the business portion area, what should you do? And then we'll wrap up in the information. The materials that you're looking at on the screen today will be available in our financial planning blog website, and we will provide that information toward the end of today's webinar. All right, with that, I'm gonna start asking Hratch the questions of, so when is the actual due date now that we are in the current environment? Can you talk a little bit about the federal income tax returns in terms of personal as well as the business entities?
Certainly. Thank you for inviting me and for that kind introduction. Welcome, everyone. Before I answer this question, I just want to make a point. I've been receiving a tremendous amount of emails the last several days, fraudulent emails from individuals asking me to click on links and open links. It seems to me that it's, given this current environment, those emails have been exacerbated. I just wanted to suggest and tip everybody to be very, very careful in reviewing your emails. I got 3 this morning and I got several overnight asking me to open documents from individuals that I know whose emails have been hacked. So Keep that in the back of your mind as you're reviewing emails and as we're communicating more and more online with clients and contacts. So thank you for that. And so let's go to the due dates of the federal income tax returns. Almost all of the returns have been extended to July 15th. Those returns that were due on April 15th have been extended. These include Forms 1040 to 1040 series, the 1041, which is the fiduciary income tax return, and Form 1120 series. And originally, Form 709, the gift tax return was not extended, but 1 or 2 days after the IRS issued a notice of this extension, they added the gift tax return, Form 709, to that grouping as well. So the returns that were due on April 15th have been extended to July 15th. In addition to the extension of time, the IRS has extended the time to pay. So if individuals have payments due that were due on April 15th, either with the return or the 2020 first installment payment for calendar year taxpayers, that payment has also been extended to July 15th.
So does that include the estimated tax for the payment?
The estimated tax for the first installment payment due April 15th has definitely been extended to July 15th. There's some confusion as to the second installment payment due on June 15th and the third installment payment due on September 15th. The original Senate bill had an extension of those payments until October 15th. And I read on a couple of bulletins, I just checked the IRS website, there was no commentary about the 2020 installment payments, except for the first one, except for the one due April 15th. I read on another website, on a blog, tax preparer's blog, that those payments have been extended, so I'm not sure.
So I guess for everyone here is that as the things are moving very, very fast, and as the agencies are scrambling through interpreting the new law, the new changes, a lot of these is moving targets. So as soon as we get information, we'll be sure to share with you, and then be on the lookout for updated information, probably through news medias. The best way to find these information probably is from the IRS website. But the last time I checked, I think the website hasn't a whole lot of updates as of yet. Okay, so thank you very much for the extension in terms of the personal. For the business entity returns, and we know traditionally the corporate type of return, that's also being extended. So, because you mentioned about 1120 series, that's also been extended. But how about C corporation? C corporation, is that also extended?
Yes, the C corporations were extended, but what was not extended was the partnership tax returns, Form 1065, and also Form 1120S. Those were due on March 15th. And because March 15th was on a weekend this year, the due date was pushed to Monday, March 16th. Those returns have not been extended. So for individuals who haven't filed these returns, they're delinquent. There's opportunities to try to get late filing penalties waived due to reasonable cause, but that has to be done on a case-by-case basis.
Okay, all right. Thank you for clarifying that, because I was also curious about in terms of those returns that was due on March 15th. Okay, great. So this year, unfortunately, for the personal tax return purposes, I owe taxes. And I filed my tax return a little bit too early, I guess, and I paid. But I heard that somewhere, if you owe taxes and you file your return late, how about when do I actually pay them?
Let me make one comment regarding filing late. Because the due date was extended from April 15th until July 15th, if the returns are filed on or before July 15th, they will not be considered late. And according to the IRS, no interest penalty or late filing or late payment penalties will be assessed. But if somebody has filed their return, if somebody filed their return today, for example, and they owe tax, they don't have to pay that tax until July 15th. So long as the letter is postmarked on or before July 15th, they will not be subject to any interest or penalties.
So that means that if someone who is planning to file their tax, let's say July 15th, the day of, that means that you also have to postmark the payment if you owe taxes on July 15th as well.
Correct.
Okay.
Correct.
All right. So that's
if
good.
If they pay by check, there's ways to pay electronically through the
Correct.
EFTPS, and so long as the payment is scheduled to be transmitted to the IRS on or before July 15th, those payments should be considered on time.
Okay, good. Let's talk about IRA. So we know that the IRA contribution or qualified plan contribution, lots of small business out there that they do contribute to their employees' plan. Talk about the due date for that now that the tax return extension is pushed out to July 15th. So let's talk about the qualified plan in general, plus the IRA due date.
Yeah, the IRS came up in their frequently asked questions, which is an excellent resource on the IRS website, and that due date has been pushed to July 15th as well.
Okay, so be on the lookout, because if your clients still want to take advantage of any kind of tax advantage savings, could potentially reduce their tax liabilities, then up to July 15th is still a good time to contribute, and make sure that you designated that is for 2019, not for 2020. Aside questions here, we know that some family may not be fortunate enough to have a job or have a pay today, and they may just go right into their qualified plan or IRA and take money out. Can you talk a little bit about, are the penalties now being waived? If the penalty is waived, are there any tax liabilities if someone were to take the money out due to an emergency?
This new tax act that passed has eliminated or suspended the need for required minimum distributions from IRAs and qualified plans for 2020.
Okay.
So that's one point to note. And
okay. So there's basically no 10% penalty.
Well, there's no requirement for minimum distributions for those who are over 70 and a half, or those who will turn 72 this year.
Right, 72.
Under the new rules.
And then so under the new rule, that even if someone who is younger than 72 who needs to access their qualified plan for emergency purposes, I think that there's also a waive of the 10% penalty. That's how I read it.
Yes, there is a provision was included in the Tax Act that just passed, that individuals can withdraw up to $100,000 without incurring the 10% early withdrawal penalty. And there's a provision that if that amount is contributed back into the retirement plan over a 3-year period, there is, even though the amount is going to be substantially higher than the maximum contribution amounts, individuals will not be prevented from putting those funds back into their retirement accounts.
Okay, but the bottom line is that if they do take money out, there's no 10% penalty, but they still have to pay current taxes.
Yes.
Okay, so there's no way around it. Just to keep in mind that you're only waiving the 10%, but you still have to pay current taxes. Just make sure that you consult with your advisors and planners out there or CPA before you actually take the money out. So Terry has a question regarding about the loan increase from 50,000 to 100,000. I think that's what Hratch just mentioned. It's not, technically speaking, it's not a loan, right? It's a withdrawal.
Exactly. It's not a loan, but it's a distribution where the 10% penalty is being waived because of the COVID-19 pandemic. It could be put back in, or theoretically, it could be considered a loan so long as it's put back in. There's no restrictions in doing that. The 401k plans generally have loan provisions,
right.
but each 401k plan's specific regulations or specific documents have to be reviewed to determine how much it can be borrowed from that plan.
So from a loan perspective, it's really up to you and the employer to interpret
Exactly.
however the plan design was, and then take it from there. So the bottom line is that if you need the money, even though this is something that most advisors will not recommend you to do, but in a desperate time, if you need it, you know for sure that the 10% penalty is waived, and you still have time to put it back within 3 years period of time. Although you still have to pay current tax liabilities, but at least it will kind of help you if you are in the emergency for that. Let's talk about health savings account or medical savings account. Are those contribution date being extended as well?
Yes, those have been extended to July 15th. So individuals who have not had a chance to contribute to those accounts can do that up until and including July 15th.
How much do you recall how much that if someone needs to or wanted to contribute to the health savings account, this has to be a high deductible health care plan, right? Would you have that number handy just in case?
I believe for individuals it's 5,000, and for families it's around 7,000. And
I think it's about 7,100, yeah, something like that.
It's in that neighborhood, and there may be a catch-up contribution as well.
Yeah, I think there is $1,000 catch-up for someone who's older than 50 years old. All right, let's talk about the stimulus for families. Then we have been hearing from the news, each individual will be getting $1,200, and if you have a child will get about $500. Can you talk a little bit about who qualifies? And we know that not everybody's qualified. There's certain AGI threshold.
Yes.
And so can you walk us through that?
Sure. There's two requirements. There's the AGI threshold requirement, and there's also the tax return filing requirement. Originally, this tax return filing requirement was a little bit obscure, but the IRS clarified that yesterday. So the AGI requirement is this: every individual is entitled to $1,200, and dependent children are entitled to $500. Obviously, the parents will get those funds. So these are the AGI limitations. For single individuals whose AGI is $75,000 or less, will be getting the full amount, the full $1,200.
Okay.
And they're going to be losing. For married filing joint, it's going to be $150,000 or less. And for head of household, it's $112,500. Now, for the upper limit, for single individuals, it's $99,000. For married filing jointly, it's $198,000. And for head of household, it's $136,500. And what these upper limits mean, that individuals who are filing in those categories, and these are filing return requirements, the single, married filing joint, and head of household. Single individuals who make more than $99,000 will get nothing. Married filing joint who make more than $198,000 will get nothing, and so on. In between those numbers, between 75 and 99, there's going to be a haircut or a reduction in the stimulus payment. And it's $5 per $1,000 reduction. So
every
$5 reduction for every $1,000 above the 75. So individuals who's going to make 76 will get a reduction of corresponding reduction in the stimulus.
So really the reality here is we're trying to help the middle class for the purpose of the stimulus. We have a questions here from Ellie. Can international students receive such stimulus?
Yeah. Hold that thought for just 1 second. Let me address the second point here, the tax return filing requirement. So how is the government going to know these AGI amounts for all of the taxpayers in the United States? In theory, all taxpayers in the United States who have a Social Security number will qualify for the stimulus. The tax return filing requirement, the government said they're going to look at the 2019 tax returns and to see what the AGI amount is on those returns. And if individuals haven't filed a 2019 return because the due date has been extended, they're going to look at 2018 tax returns. So the question is, well, what happens if individuals haven't filed 2018 or 2019 tax returns, either because they were late or they're behind in their filings, or like a lot of individuals, their income is not high enough to warrant the filing of a return. And the IRS clarified that yesterday afternoon, saying that they're urging everybody to go and file a tax return online, even a simple tax return with the pertinent information, even though in theory, individuals whose income is not high enough may not be required to file a return, but the IRS is asking everybody to file returns so that they can use that information on that filed return to provide them with a stimulus check. And
so this sounds like more of a more effective than the census report then.
Yes.
So really, in effect, that they will get a good data about
Absolutely.
who actually is in the U.S. So I guess the questions that from Ellie saying the international students, the question there would be if the international students actually work that has some sort of and has some sort of accounts, bank account that incur some interest, potentially they could file the tax return if they have a valid Social Security number. They would qualify. Is that the case?
If they filed a return for 2018, I believe that the IRS will look at that information and use that information to issue a stimulus check.
Okay, all right. So hopefully that clear up the questions regarding about the stimulus for the family. So thank you, Hratch, for that. I'm going to kind of switch gear to look at the business entity. And I know that you probably still have questions. We wanted to make sure that we cover all the information. So we'll take questions toward the end of the session. I'm going to take you through 3 different areas. I'm going to look at emergency payroll protection plan loan, or then we're going to go through the disaster assistance loan, and we're going to talk a little bit about the business taxes changes. So what I mean by that is that the emergency loan, to be honest, in the SBA world, it's been around for quite some time. But the new information that you hear from the press is this one. This is the CARES Act, which is basically the COVID-19 Aid, Relief, and Economic Security Act. This is that $350 billion you hear from the news that to cover every small business. Small business defined as less than 500 employees, and the firms could include sole proprietorship and 1099 contractors, that as long as you have Schedule C, that's how I see how the rule works. And this also applies to people who have affiliates. For example, some affiliates provides food services, accommodation, franchisees as an example. They are all qualified. And so the idea here is that you can borrow up to $10 million if your business has been in existence before February 15th of 2020. And you kept your employees for 8 weeks period of time. So this is a key important part. You have to keep them for 8 weeks period of time. And you will be able to qualify for 2.5 times of your 2019 average monthly payroll. Okay, so it's calculated based on the 2019 your payroll on an average monthly times 2.5 times. The good news here is that there is typically a collateral or personal guarantee when you borrow money from the SBA loan. In this case, if it's a payroll protection, there is no collateral and no personal guarantee. And most importantly, there is a conversion that potentially it will become a forgiven or grant. So let me go through what it actually means in terms of grant conversion. In able to get grant conversion or forgiven the loan, the general rule is that you have to be assuming you are operating your business as usual for 8 weeks period of time. And as well as after the fact that you actually receive the loan. I guess we have a question. Hold on one second.
I'm responding to the questions as they're coming in.
Oh, okay. Sorry about that. I thought there was a questions. All right. So speaking of the grant portion of it, the general rule is that you are operating your business as usual. They're going to look at how you spent your utilities, how you spent your rent, your interest payment, and they're going to see that you actually are still operating your business as usual. Then every dollar you spend to operate your business on the payroll, and every dollar will be forgiven. And when we say payroll, we're talking about salaries, medical, paid leaves, etc. So that's your payroll. Now, if you keep your employees, but you started to reduce headcounts or even reduce their salary, then that dollar amount will be reduced in terms of forgiven portion of it. Employees that make more than $100,000 will not qualify for this type of forgiven, the grant portion. And if you reduce their salary, let's say more than 25%, definitely the dollar amount forgiven will be drastically reduced. Now, for some of you who let go employees already, if you are going to get this particular payroll or paycheck program protection plan, if you bring them back, and that will actually qualify for more tax credits through the process. Now, this is as long as we can interpret at this point. The agency is still writing those policies, so stay tuned. There's a whole lot of things that we don't know yet. Now, I mentioned about Small Business Administration already have this type of loan in place. This is not new. The payroll or paycheck protection plan is new because of the most recent stimulus package. There is a terminology called EIDL, Economic Injury Disaster Loan. And in a moment, I'm going to take you through where you can find that information to help your business or your clients. So Economic Injury Disaster Loan, typically, this disaster loan is for up to $2 million. This has to be in an area that has been declared either a state of emergency or declared as a disaster. So in a moment, I'm going to show you how to find out if your particular state or county has been declared for that particular disaster. Then you can qualify up to a $2 million loan. The catch here is that you also have to be a small business, and this is typically for working capital. This is not just for payroll, but working capital. This one, you have it up to $2 million. And there is a difference here. If you compare them to here, you will see that this one, you do need to have collateral. According to the SBA website, it did say that you need to have collateral and personal guarantee. However, for the COVID-19 situation, it varies by state to state. So you do need to check on your state to see if that actually is a requirement. We know that if you borrow more than $25,000, you are going to get some collateral. So that's what we have known so far. The interest is either 3.75% or 2.75% if you are not for profit. And the term can stretch it out to up to 30 years period of time. However, the caveat here is that you cannot use this loan to pay off your existing loan or refinancing your existing loan, and you have to maintain a certain insurance per SBA's requirement for the loan. All right, so let's see, we have questions here about okay, so I guess was the questions answered already? The first $100,000 will be repaid. I guess I wasn't following on the chat, so I'm going to skip that questions a little bit. All right. All right, so for the idle working capital, keep in mind that I'll show you the screen of where to get those information. You really need to look at state by state. Now, another things to look at is unemployment insurance. And I'm going to come back to unemployment insurance in just a little bit, but I wanted to talk about the idle advance. There's something called the idle advance that's new for this particular crisis that we're in. And this has something to do with that if you get the request through the SBA, up to 3 working days, you can receive up to $10,000, and that will potentially be forgiven right away. Here is the caveat. The government is not that stupid. They know you need money. You have to pick and choose. You cannot get the payroll and the idle at the same time. You have to pick one or the other. So if you do have a workforce, do have a payroll situation, then what I would recommend you to look into is that payroll protection or paycheck protection plan, as well as we're looking into the idle working capital. So if those are the business that you're in that has a sizable workforce and do need money, you do want to take advantage of these. Now, the stimulus covers this payroll portion of it. According to the policy or the Senate and the Congress bill, they should cover everyone. I don't know if it's going to cover everyone. So I'm going to encourage people that if you do think you need it, stand in line quickly. We don't know how fast these things are going to turn around. And typically SBA loan, you have to go through a bank. In this case, the SBA has streamlined the process. Everything has to go through SBA, and you'll be assigned with the local bank to work to get the loan through. So, so you need to get prepared. I'm going to talk about unemployment insurance for a moment. For those businesses that already incur layoff, furlough, or combination of these two, and plus they're going to take some sort of idle, either payroll protection or idle loan, working capital loan, you wanted to make sure that the unemployment, it might potentially come back to bite you, because if there's a percentage of that, the existing business still have to pay back to the particular state. In terms of individual unemployments, the federal stimulus package do allow up to 4 months instead of the 13 weeks, and the 1 week wait period has been waived. And it has been expanded right now. As long as it's tied to the COVID-19, you will be able to qualify for those expanded unemployment coverage. Now, the way that it works now for the individual unemployment is, the way that I understood how it works is that you will potentially get an increase of your weekly benefits, and that weekly benefits solely depending on the state that you're in. And that is not your full pay, it's a percentage of your full pay, and that depending upon the state that you live in, plus another $600 per week from the federal government. How to qualify for this? In a typical unemployment situation, you have to be available and continue to look for work. Because of the COVID-19, some of the state may waive that requirement. So check with your state if unemployment is something that you have to file. Once you go back to work, all of these benefits will be cut off. So that's the things that to make sure that you know that there's an unemployment portion of it. Now, I did mention about that I wanted to give you a perspective of these loans. I am not a person that I like to borrow money, but we are in a desperate time, in a desperate situation. But I want to put things into perspective. By the end of last year, 2019, the SBA, typical SBA loan, and as you can see on the screen, is around the 5 to 7% range, depending on how much you borrow from SBA. That means that the loan that we just went through, if it's a working capital idle loan, we're looking at about 3.75% if you are a for-profit organization, or 2.75% if you're not for profit. If you need money, compared to what you see on the screen there, this is actually not a bad deal. If you do need money, this is not a bad deal to consider. And don't wait, because I don't know if the amount that has been proposed now will be actually available, because everyone is somewhat nervous and trying to get this in place. So let me show you a couple of screenshots that I got. The first thing that you need to do is to go to your state's website to see what is defined as a essential business, because essential business, their rule might be a little bit different. This is probably addressing for those businesses that's non-essential, that you either have to work from home or close your offices. So check your state website first. On the screen there, that's a California state website talking about what do they mean by critical infrastructure. Then this is the screen that you can go to check on the SBA website for disaster loan assistance. And the URL information will be included after the session today. This will help you to pull down the state that you're in, and then a specific county to see if there's any specific rule that will be exception or additional requirement that needed for your particular area. So here is the example for the California state. Basically, everything I went through is in that particular policy. It tells you that a time frame, when is it effective, when is the loan going to expire, what is the adjacent state and the county that actually goes in, the loan percentage, and the loan is up to 30 years, by the way. You can stretch it as long as to 30 years, but these are the information that you can actually find out more about your particular state. Now, the payroll and the Paycheck Protection program in the SBA website has very little information there yet. They are still scrambling through trying to interpret what the bill was. And so stay tuned. There are going to be more information coming in the SBA website. SBA has been moving in a rapid mode, trying to help people streamline the process and get everybody through the money that they need to maintain their business. So this is the website that they established probably late last week. And this is their streamlined process. Everything that you need could go through this particular website. So I really encourage you to do that, to at least find out what it is. Now, in the SBA world, they do have a very simple 3-step process in terms of disaster loans. Whether or not it's a paycheck or payroll loan that could potentially become a grant, or just the idle loan that we went through. You have to go through the SBA. There are 3-step process, fairly simple. You go online, and I can tell you some of my clients has been kicked out of the website because there are so many people trying to get through. And I encourage people that if you do need money, please go get that quickly. We do not know if there's going to be plenty for everyone, because the government is basically using some data that filed back in the 2018 and 2019 based on those payroll number and based on those number to determine how much that they need to allocate for the disaster loan. So if you do need money, please go to their website and follow their process accordingly. When you do the SBA loan, whether or not it's idle or payroll protection, chances are that if they need a personal guarantee or collateral, you are required to file a personal financial statement. This is different than your business financial statement. This is basically letting them know your assets, your liabilities, your credit score, and things like that. It really still will depend on your credit scores to allow them to issue you the amount of loan that you would need. So be prepared for doing that. If you don't know how to fill out these returns, this is a good time to reach out to your CPAs, your tax person, or your financial advisors. Help them to get some help to fill out the form so you can appropriately get the necessary loan that you need to operate your business. Now, how much should you borrow? If it's a payroll protection program that we just talked about, you have up to 2 times of your average 2019 monthly payroll. And if it's a working capital, it really depending upon what your working capital is. And again, payroll is up to 10 million, and the idle working capital is up to 2 million. And so you really need to look at that closely with your advisors or your tax person, because this is still a loan. The idle loan is still a debt that will incur in your business. You need to be careful with that. Whether or not you need a 6 months, 3 months, or a year working capital, you need to be having that discussion with your attorneys or with your CPAs, with your financial advisor, making sure that you are doing the right thing. You don't want to just blindly go in and have a debt and unable to pay back, because the idle loan is not forgiven for the most part. Now, there are some tax changes, business tax changes, and I'm going to go through some of them. And I may or may not have all the information, but hopefully the Hratch can provide a little bit more insight as I go through this. In terms of employee retention business credit, if your business is partially or fully suspended because of the COVID-19, and your sales have dropped more than 50% compared to the same quarter of 2019, then you can, and you are probably going to be qualifying up to $10,000 employees. This type of business employee retention tax credits is for the wages between March 13 and the end of this year. Okay, so that's the employee retention tax credits. Self-employed individuals. I know I am a LLC partnership organization, and I am a self-employed as well. And that means that I may have to pay self-employee taxes, employer's portion or employee's portion of it. The program here is to the amount that you will owe in 2020, 50% of them would defer until the end of 2021. 50% of the other 50% would defer till the end of 2022 to pay that portion. So that is something that you really need to discuss with your tax and CPA to find out how much is that, and then how much of those that you can actually delay them. The idea here is to increase that liquidity for your business to operate. The other thing is that potentially that some of us are going to incur net operating losses, and if we don't continue to have business coming in, we still have to keep the business in operation. You potentially will have net operating losses. So any net operating losses incurred in 2018, 2019, as well as 2020, you can carry back for 5 years period of time. For some of you that have corporate AMT, alternative minimum tax, that you expect that you will have corporate alternative minimum tax credits back at the end of the 2021, you can potentially claim the refund today. And again, we don't have much detail of it other than kind of a framework concept for that. We're still waiting for some more interpretation around the corporate AMT. Business interest expenses deduction. Now, this is only for 2019 and 2020. This will allow business to increase their deduction of the business interest expenses. It used to be capped at 30% and is now increased to 50%. So Hratch, this was the questions that I had when I was reading through the changes here. I was not aware of, is this a C corporation type of a limitation, or is this apply to any business entities?
It applies to any business entity, but for entities that have revenues below $25 million do not have to abide by this provision. It's for big businesses.
So this is typically for big businesses?
Yes.
Okay.
Well,
all right, thank you for that.
Middle market and larger enterprises.
Okay, thank you for clarifying that. And for hospitality industry, by the way, if you're in the hospitality industry, if you continue to have business improvements such as capital investments, you can get immediate write-off. Apparently, I don't have a top dollar amount for that, so I guess that's still up to in the air in terms of if there's a maximum or not. But if you're in hospitality industry, there's an immediate write-off of any type of improvement that you make into your properties or business. There's also temporarily waive the excise tax if you're using alcohol for producing hand sanitizer in 2020. So that is something that is also it's just a temporarily waived for that information. So we have, okay, so we have some questions answered already. Okay. All right, so I'm gonna do kind of Hratch, do you have anything else you want to add in terms of business tax changes?
The hospitality, it's leasehold improvements
That's
made
right.
to the internal inside the store or the restaurant can be written off. Previously, the
Yes.
rule was that they had to be depreciated over 39
Correct.
years, but now this does not apply to elevators or capital improvement type items or expansion of the space. Only
That's right.
renovation of the inside of the space, whether it's a retail or a restaurant.
Okay, so it's a retail or a restaurant that could be using this from a renovation perspective that they will
Correct.
qualify for that immediate write-off. Okay, very good. Thank you for clarifying.
Which is the 100% bonus depreciation rule that
That's
most
right.
of you have heard about.
So it's called a technical term, 100% bonus depreciation.
Correct.
All right, that's good. Thank you. All right, so we're going to open up for questions real quick, but I do wanted to kind of let everybody know that yes, we are in crisis, but please don't waste the crisis. Now that you potentially have a little bit of downtime, use this downtime to plan strategically, especially in your business model. Now, we know that your business model may work today, it was working yesterday, but it may not work in the future. So this is a great time to really strategically look at your business model, trying to see if you can stay flexible with any economic climate. So then your business can still thrive, not just survive, but thrive. The other thing is that let's all be positive. We can all get through this together. And I believe we will be able to do that. I think people supporting people is the best thing. Sometimes the government trying to help us, but they are usually a few steps behind. And therefore, that there's always, if you can help another fellow business owners to understand these type of things, or just simply pass along the information that hopefully someone's family or some business can be saved, please do that. And we'll be all coming out stronger after this particular crisis. So with that, I'm going to turn the floor back to Josiah to see, and Hratch, if there's any questions coming from the floor. I think we have some questions already answered in the chat box. Yeah, so yeah, there was one question regarding about the business income decline. Yes, that's you have to compare if it's more than 50% has to compare to the same quarter of 2019. All right, so I'm going to turn the floor back to Josiah if there's no additional. I think that there's one more questions in the chat box. Yeah, so for companies that is more than 500 employees, there are some other provision available to them. And so for the most part, they are more on the loan side, on the working capital loan side, not necessarily on the protection of the payroll side. So there's a different provision for those businesses that's a larger business. And I believe the larger business also have more available stimulus compared to the smaller business there. So I did not include that in there, but there is a section specifically for them. And Jeff, I can email you some link for that. There is very little information on that. I have to let you know that it's not a lot of information, but the bigger business does have a different type of stimulus package.
In regards to the companies that have less than 50 employees, there's an exception for essential service businesses and or businesses who lay off employees and they will end up being shuttered or go bankrupt. Then there's an exception that those businesses do not need to comply with the FFCRA, but there's no information of how to apply for this exception or exclusion and the procedures around it. Because there's labor issues, the Department of Labor is involved in this in addition to the IRS. And various state state agencies are also involved. And other jurisdictions like the city of Los Angeles, if businesses are located in Los Angeles, they've have passed their own ordinances to help employees.
Okay, thank you, Hratch, for that. And Josiah, are you ready or?
Yes, I am. So thank you, Dr. Jen. We're so glad to have you for the next Gen Mentoring Forum. What an informative session it was. Thank you for California Lutheran University School of Management Financial Planning Program for sponsoring today's Next Gen Mentoring Forum. California Lutheran University School of Management offers MBA in financial planning, helps financial planning advisors pursue a leadership position or grow their financial planning practice by deploying advanced financial planning, effective client communications, counseling, streamlined practice management, as well as leverage fintech. Please sign up for an info session for more information. Thank you, and see you at the Next Gen Mentoring Forum.